Getting insurance is one of the best ways to secure your future. It can help protect you from loss of income from unwanted scenarios like the sudden loss of a loved one. Let's look at traditional life insurance and its protection benefits. With traditional life insurance, you pay premiums based on your desired protection coverage. There are two types of traditional life insurance. One is term or temporary life insurance. The other is permanent or whole life insurance. Both provide guaranteed death benefits to be received by the beneficiaries of the insured. But there's a crucial difference. Term life insurance only guarantees the death benefit for a limited period of time within 1, 5, 10, or 15 years only, depending on the policy obtained. At the same time, you're only required to pay for the premiums during the years you are covered. So for term, if the insured survives beyond the period specified in the policy, then the protection benefit expires. However, the insured has the option to renew the term life insurance for another term, if he or she wants continued coverage, or convert the term policy into a whole life policy. On the other hand, whole life insurance guarantees a death benefit payout for the entire lifetime of the insured. However, it charges higher premiums compared to term life insurance. One has the option to pay the premiums for the entirety of his life, or for a limited period of time. Still, the higher premiums can be worth it because there's no expiration date on your protection coverage. There's also the added benefit of a cash value, or what they call the living benefit, because you get to enjoy it while you're still living. The cash value attached to a whole life insurance may be kept as your savings, or even taken out as a loan to spend on important needs such as a source of cash for certain purchases, emergency fund, or supplement for retirement funds. But of course, like every loan, you have to consider certain charges that will come with it, as well as a possible deduction from your death benefit in case you do not get to pay the loan back. So borrow responsibly. Still, it's great to know that your life insurance can provide you an alternative source of cash in really urgent times. Some say term life insurance is better because of the lower premiums, while others say whole life insurance is better because of the cash value. But the truth is, both can be valuable instruments for income protection of your family, as well as for meeting financial goals or needs. Insurance's death benefit, whether permanent or term, may be used as cleanup fund to pay hospital bills, funeral expenses, mortgage redemption, and taxes, including estate tax. Readjustment fund to allow the family to readjust to a new standard of living. Family income to provide for the family's needs while the children are still dependent. Life income for the living spouse to fund expenses if the children are already independent. Education fund to support the education of the children. Emergency fund to use for unforeseen events like medical expenses for sudden illnesses or accidents. For traditional life insurance, as long as premiums and loans are paid, the amount of death benefit is guaranteed. It's important to pay premiums and pay back loans in case you took one against your policy, so that you'll have a peace of mind by getting the protection coverage you paid for. Assess your family's needs and financial goals.